Parliament a few days ago enacted the Finance Act 2023, the to provide for the imposition and alteration of taxes and to give effect to the financial proposal of the government and to provide for other related matters. However, the act has sparked some mixed feelings amongst business people in Sierra Leone, and some financial experts believe that the Finance Act 2023 represents an approach to address revenue shortfalls to fund essential services. So this morning, to discuss this act, we have in the studio Ibrahim Sorie, Commissioner, Domestic Tax Department, NRA, and Rashid Conte, Secretary General of the Sierra Leone Importers Association. Gentlemen, you're welcome to the program.
Thank you very much.
Thank you very much.
Before I go over to you, gentlemen, we have a position from Betts Farm on a serialized explanation on the Finance Act 2023, just so we set the very flaws and foundation of this particular discourse. Let's take that 1 minute 23 seconds insert, and then we come back.
On 4th April 2023, the Finance Act 2023 was passed by Parliament. It's still waiting presidential assent. So the key revenue enhancing measures introduced in the Finance Act are: firstly, the minimum alternate tax for companies, meaning that companies will have to pay 3% of their turnover even if they make a loss. Secondly, the stamp duty rate was increased from 0.5% to 2%. Thirdly, there's the introduction of the tourism levy at 2%, meaning that tourist businesses will have to charge an extra 2% for accommodation, for food, drinks, etc. More significantly, there have been major changes in the GST exemptions list. Firstly, there's a reintroduction of the GST on fee-based financial services charged by banks of 15%. There's also a removal of the GST for plant and machinery for manufacturing, mining and agriculture. And there's also a removal of the GST for solar products, and also the removal of the GST for port services for rice, the importation of rice. Lastly, there's an introduction of the annual circulation levy of 200 new Leones for vehicles and kekes. For more information on the Finance Act, please go to our social media pages.
I think there's a version there for Betts Farm, but for the NRA, is this the fine act bringing out what we need in terms of revenue generation?
Yeah, thank you very much for the question. Basically, let me just probably educate listeners and viewers on the purpose of Finance Act annually. Basically, this law comes into effect to handle the tax aspect in any fiscal year, looking at areas where governments can raise revenue and also consolidating or strengthening existing tax laws with the aim of financing the budget, and also seeing where governments can incentivize or support the business sector to stand on their feet to support the government at the end of the day by paying the correct taxes. So the Finance Act actually goes with the budget to identify those areas of funding and strengthening the tax laws and closing the loopholes. That's basically what this one intends to achieve, and more especially in terms of revenue generation. And we've seen over the years, most Finance Acts have been geared towards giving incentive to businesses, helping them to grow, making sure that a lot of exemption in terms of GST, customs duties, corporate taxes, looking at certain sectors to see how they can be incentivized to strengthen them. For instance, in 2021 Finance Act, we saw exemption for the tourist sector, wherein they are exempt from corporate income tax till 2024. So they are not paying anything for 3 years. And we've seen also a lot of exemptions to encourage the agricultural sector, mobile companies, and in previous act basically. So this year, the government sees how we can generate more money. And mind you, the economy of the world is facing a lot of problems. And domestically, we have to generate the revenues. Gone are those days when we rely on external funding to finance our activities as a government or as a nation. So we need to look within to see how we can get those resources. So that's one of the things this Finance Act actually try to address. Maybe if you permit me, I'll look at the individual issues and see how we can deliberate on them further. I'll look at, firstly, the area of minimum alternate tax, which sets it at 3% of turnover. We need to know what turnover is, Of course, maybe in subsequent deliveries or write-ups, we will provide an interpretation of what turnover means in this context and see how this law can be applicable. But basically, the aim of this law in terms of setting the 3% turnover tax is to address the high-end taxpayers who have a lot of sophistication and a lot of tax planning arrangements, whose objective, among others, would be to shift the tax base from where the economic activity actually takes place to some other jurisdiction where they can pay zero or no taxes.
Okay.
So how can we sit by as a revenue generating institution or as a Minister of Finance, for instance, seeing activities being done in Sierra Leone, money is being taken away and not paying a single dime? And these kind of businesses are multinational companies, and they make use of the loopholes, they make use of exemption regimes, and they walk away. So what we're saying here with respect to the minimum alternate tax here is that we'll look at the tax on turnover. Firstly, you estimate your turnover for us, and we can have that as a presumptive kind of approach. You pay provision on that. When the year ends, you have the responsibility to do your financial statement, disclose your actual profit. So in an event wherein what you've paid as minimum exceeds your actual tax profit, definitely you are subject to a credit, which you can utilize to offset any future obligations or even current obligations that exist. And times without number, after we've audited most farms or all businesses, as our audit plans dictate, we'll see situations where taxpayers will have to pay more money to us. We've never audited a farm which we've not established liabilities. So having that money within our custody may even help you to offset. You don't go back to the drawing board to think about how can you get the money. NRA has got some money already. Maybe somebody will argue it's a part of cash flow, whatever, and so on. But there is already a penalty provision in the law for under declaration and the rest of it. So this will provide a buffer where taxpayers will now have the comfort to know that, oh, I have X amount there, and I can use that one. I have not paid my PAY, and I can use that one. I have some areas on GST. So it creates that comfort zone, an envelope which can be played with around for businesses to thrive. So at the end of the day, you are comfortable. But in an event wherein you are not even able to recover, the minimum tax you've paid is to some extent still giving you some more resources, you have that credit to be utilized over a period of 10 years. Each year being treated individually. So you're not saying because you have a credit in year 1, year 2 also on the credit, year 1 lasts for 10 years, year 2 lasts for 10 years, it goes on like that. So you have that resources. So in an event where you even have significant cash flow issues, you can tap into that envelope to offset any current obligations going forward. And that will put you in a position where you'll be deprived or you'll be restrained from going out there to find resources to meet your tax obligations, basically. So the idea here is to target high-end tax planners who have the sophistication to employ experts to play within the tax laws, the gaps therein, to see how they can minimize obligations or even not paying any dime at all, and also to see that there is resources within the operations of the state that can be used to finance its activities, at the same time giving you a buffer to tap into whenever there's a need for it to meet that one. And we've seen a lot of international models that are targeting those kind of things, the base erosion, the OECD models on transfer pricing, and all those kind of things. So these laws are basically consistent in closing the tax gap, in minimizing avoidance practices which are very sophisticated. And even when we do audits, obviously, there are lots of issues around that. So, which we may not want to go into for the purpose of these discussions. So that will provide a kind of comfort. Right. Then looking at the GST on rice and whatever, as the Bet Farm has highlighted, definitely when you look at the law, at times you need to have the lens behind the wording of the law. And what is it intending to achieve? The laws will say the intention of the drafters. Basically, if rice is exempt from GST, without the port service, can you get the rice to the doorstep of the consumer? No. We've provided rulings in the past. We have evidence to the effect. Significant rice importers have come to my office, and we provided a ruling that that's why it's exempt. And nobody has asked them to pay a dime. And most of these laws, when they are enacted, they are not only going to be interpreted in isolation of other laws existing, and also where the taxpayers have critical issues they think they need clarifications on, they seek private rulings. We also have public rulings we do. We have what we call Commissioner General's practicing notes. So these are the areas, look at the nitty-gritties, look at the areas where the ordinary man will not see. Or you not see look at the areas where the text of the law will not probably show those kind of things. So we have those kind of situations which we normally create. So it's not a deviation for what used to happen, maybe tightening laws that are existing and so on. Okay. Then probably it talks about the stamp duty of 2%.
Yeah, just to comment that, because there are many new provisions in the new act, the stamp duty fee you've just mentioned, the tourism levy, the minimum alternate tax you're also mentioning. Now, what is the intention of the draft, of the bill makers? What is the intention?
It's a raise revenue. That's the basic intention here. You know, as I mentioned earlier, we've got series of finance acts since 2010, 2011, 2016, 2018, 2019, 2020. At all those finance acts, massive incentives have been given to businesses. The tourist sector, 3 years corporate tax free. Last year, we've not collected a single dime from any hotel operative for corporation tax. Zero tax. The previous year again, this year again, we are talking about. They pay zero corporate tax, incentivizing them to stand on their feet, considering the calamity that befell them during the corona. So talking about 2% tourist levy, what we're saying here is that we are targeting the high-end consumers. We're not targeting people who eat in the Cookery Baffas or those local places which form masses, a major percentage of the population of Sierra Leone. We're looking at people who can walk into the hubs, for instance, into the lagundas, into the country lodge, those sophisticated places, and walk in and take food or whatever there. You're not, you might be a poor man, but at that point, you want it to be treated differently. And the sector is also an area which we've identified as an economic diversification area. We're looking at how can we tap into that. When people come to Sierra Leone, they admire even the natural topography of the country. We have a lot more, whatever. What have we done as a country to develop it? To see how much money we can get from it. Can we get money coming from heaven to finance that one? We finance it ourselves. So the users of that sector, the frequent users, are the ones that are supposed to finance that sector. And that is what is happening in most places in the world. So that's why the law made it clear. Those monies are going to be collected ring-fenced for tourist development. You don't want to go to number 2 next time and you see that kind of road. And even to access those beaches. You don't even have proper sitting places. Even access to those places is difficult. You know, because government hasn't got the resources to improve them. You know, so this 2% is targeting people who would walk into those sophisticated places and buy from those places, and they can afford. If you have spent 200,000, they say pay 2,000 tax. I'm not sure anybody will die in the process. You know, and if you look at the users, of course, there are various classes of users. That is why what we call market segmentation. You segment yourself. You think you have that class, you go there, you meet the cost. The GST is not even applicable to everybody, generally.
In fact, that's what I wanted to ask.
It depends on where you consume, what you choose to buy from, and where you think you buy.
Well, would that education reach those who are actually going to those businesses or entities?
Sorry?
This education now, that this tax is not on all businesses.
It's not on all businesses. We are targeting GST registered businesses, and there's a threshold for that. As long as you don't reach the threshold, you cannot pay those taxes. Even the GST elements, firstly, let alone the 2% tourist levy.
What's the threshold?
You know, well, the threshold GST, it was reduced to 100 million, but of course, administratively, we're still looking at something on the higher side, which was there initially, until we're able to amend it, basically, because we're going to look at all of those, basically. But let's assume it's even at the initial value of 350 or so, or 200, as we were saying, for legal purposes. Administratively, we provide guidance, as I mentioned earlier. Right. So on the baseline is that it's not affecting the people that are down there who we probably think are so the suffering masses. Okay. So there are classes of consumers which look at. And the finance, let me just go on through, please. The GST on financial services, as also mentioned, these are fee-based services. Yeah. Nobody will say you paid GST on your deposit in your account. The salary that goes to your account, nobody will charge GST on that. Again,
even though you've mentioned that this is to generate revenue, why reintroduce that again when it was removed?
Because there was a loss of revenue.
Okay.
When it was initially removed. And these are services an ordinary man may not, to some extent, privy to. Let's say you want to do international transfers. You have a family abroad. You want to transfer money there. The bank is doing that service for you. You pay a fee for that. That fee you pay. Not the value of the transfer, the fee on the service. That is where you pay the GST. And another reason, again, is that if you relieve the financial service sector from GST, you know what it means? They're going to have increased cost of operations. Because most of the services they are using, the goods they are buying to operate their banks, are GST chargeable. If they are not able to charge GST on their output, those costs are going to be embedded in their operations, high cost of operations, killing business as well, you know. But if they're able now to charge GST on fee-based services, they're able to claim some of those charges, and fair tax practices will obviously result. Another disadvantage is that when these GSTs are charged by these people, the banks buy services or goods from, and they're embedded in their cost of operation, you know the effect on corporate tax? It will reduce, because cost of operation will increase. So we are saying that GST is an input-output. You claim what you have paid as against the service you are rendering. So
let's bring in Rashid. There's a position paper from your organization and many other associations and organizations as well on all of these. Quickly, take us through, as he is highlighted, you know, the goal behind this is to generate revenue, but there's a legitimate concern from the business community that with the way the economy is going, with everything, even though there's a good side to this, there's a bad side for the business community. Take us through that.
Thank you very much. Even the passing of the 2023 finance bill was passed in bad faith. There has been a tradition whereby Ministry of Finance will consult with the private sector. You don't need to take our word for it. Consult. We are partners. We are not enemies. There is not a single year that NRA haven't achieved their target, smashed their target, and exceed their targets, which means the business community is paying their taxes. Again, the commissioner's arguments has just been eroded. Now, simplification of taxes is one of the goals for a tax. So why do you need a separate lens to go and actually look behind the words? To me, as a business person, I don't have to employ an expert to go and look at the interpretation itself. What you state there, it's law. You read it and you understand it. Okay, he's talking about the GST threshold. Let me tell you now, the GST threshold, international best practice states that for you to be GST registered, you must have a turnover of $50,000. When it was enacted in 2010, it was at that level. With the exchange rate, it was $350 million for $50,000. They reviewed it in 2021. They brought it down to $100 million. $100 million is barely $8,500 turnover. Now, $100 million today is $4,700. Tell me which cookie shop will not turn over that amount? So if you're saying, no, you're targeting the big guys, cookie shops, with the price of rice today, every cookie shop will be actually targeted because it's law. If you say, oh, no, I will not target them, but take it out of the law, increase the threshold. Let me come back again to Time Magazine. Time Magazine recently ranked Sierra Leone among the 50 top countries in the world. COVID killed the hospitality sector and the tourism sector. For 2 years, these people haven't got businesses. Some of them have not recovered. So now gradually they're recovering. Time Magazine is helping them. Governments have been trying so hard to promote Sierra Leone as a tourist destination. What do? Leverage on it. Bring down the prices of things. Reduce taxes. Encourage people to start coming. When you start getting a lot of people, then you start increasing taxes. Don't forget, we're competing against other countries like Senegal, the Gambia. From London to Gambia, return, including hotel, is about £700 sterling. Tickets from London to Freetown, London, is about 1,400. Sometimes it goes as high as $2,000. So how can you encourage tourists to actually come into the country? You can't. If this bill is enacted, let me tell you what will happen. We're going to lose jobs. The country is the Ministry of Trade have been trying hard to help Sierra Leone on business ranking to actually go up. But you're going to discourage new businesses coming into the country because you've just increased about 9 different taxes. Already the cost of rice, it's extremely high. The minimum wage is about 700,000. The cost of rice is 700,000. So you could say the cost of living is so high, this is nailing the coffin on people, on the ordinary man. Of course, there is no GST on rice, but with the port charges, this is part of cost. Last 2 weeks, I brought a container from China. The container got to the port, I cleared it from the port, took it to Bo. It cost me 17 million for 20-foot container to take a transportation cost. Imagine the port charges for getting the rice out of the port and transporting it. If you're going to be charging GST on that, of course, GST is a charge that you have to transfer. So who is going to board the tax? It's going to be bought by the ordinary people. And they are already suffering. People are actually suffering. To be honest. Again, let me just tell you what the CEO for Mercury International told the Minister of Trade on Tuesday. He said if this tax, the MAT tax is enacted, because they are working on 2.5% margin. They are dealing with volume. He said, look, Mr. Minister, I will sack 50% of my stuff. I will stop advertising with AYV 98.1 and SLBC. Part of the corporate social responsibility that we've been doing, the freebies, we'll stop it. Because we will not be able to recover. Here, what that tax does is, it penalizes somebody who is actually making a loss. Because they're looking at your turnover. The previous tax will look at what you've inputted, your investment itself and extra charges, and then if you make profit there, you pay 25%. But here they say volume. So look at people that are actually dealing with air tickets. They don't own the planes. They are working on commission, and sometimes it's $50, $30, $20. And they've got to pay rent, they've got to pay their staff. So if you charge these people on their turnover, you're killing them. Petrol stations, you're killing them. Most of these big wholesalers, these importers, are working on 2.5% margin. Already it's so expensive to run business in the country. The cost, the exchange rate is so high. If you want $1 million from a bank, you can't get it, you have to go to the streets. The street determines the prices today. The instability of foreign exchange. Interest rate is 26%. If you go to the microcredit, it can go as high as 36%. So if your margin is 2.5% and you take credit, you go and take a loan and you pay 36%, how are you going to be trading? Even the SMEs that form the bulk of the private sector in this country, they used to go to Guinea to buy goods and bring into the country. Now if you go to Balamuya border, it's dead completely. Because if you take $1 million to Conakry, you end up getting 450 francs. What are you going to buy from Conakry and bring it into the country and sell? You see, again, they've increased, they've actually put 15% on the importation of renewable energy. Solar. Light is not a privilege, it's a right, for goodness sake. You're impacting on the ordinary person in Kailaon, in Kenema. They are not connected to the national grid. The only way they can provide light for themselves to enhance their livelihood of children studying is by buying solar lights. Bang, you've put 15% on that. And now let me tell you again, we're spending $250 million every year for the importation of rice into this country. We're eating 3 containers of imported chicken a day. 3 containers imported eggs a day. How ironic can that be? We've got 75% of the land is horrible. We can't actually produce our own food to bring down the price of food, but at what we can export. So now, here, by you putting GST on equipment for agricultural use, you're just killing those that have got the intention to come and industrialize. You see, subsistence farmers have not making a single impact for the last 100 years in this country. The only agricultural companies that can make impact into agriculture and address the food insecurity, job and wealth creation in this country are companies that want to industrialize. In my own case, I've just set up the largest Gary factory in the Mano River Union. I've got the largest cassava farm in the Mano River Union. I have industrialized, trying to address food insecurity. Now, 2 months ago, I imported machines. I didn't pay a dime for it. Thank Thank you very much to government. The money that I could have actually spent to pay the GST itself, now I've used it to pay my staff. As I'm sitting here, I've employed 35 people paying taxes and assets for them. If that is replicated in every region, you could see how we could start addressing the food insecurity in the country. But now, and don't forget, we are competing against Asia that have got all the goodies, basically. They don't, you see, they've got concessions. You know, their governments are helping them. Here, you start to import the inputs, you import the machines, you import fertilizer, you import insecticide, even the bags you import almost everything. The only thing which is available in Sierra Leone is the land and the air and water.
Okay.
So how can you compete against those people? Okay. So if you want to actually address the food insecurity and you want to help our people, to be honest, take out this. You see, we're asking the president not to actually sign this particular bill itself. You see, there is no consultation, and there has been a tradition whereby the Ministry of Finance will invite the private sector for their inputs.
But actually, the concern from NRA is if, to a very large extent, businesses, companies, industries have been enjoying low tax or no tax at all.
Yes.
And at this point in time, government and NRA wants to generate more. If you say, no, don't give us this tax, it is too high, it means more cost on us and it will run our businesses down, how will government generate money at the end of the day?
And the commissioner just said there are loopholes. Close the loopholes for these companies. Close the loopholes. Why do you have to target somebody like me who want to address food insecurity in the country? How will you encourage big businesses, multi-billion businesses to come and start doing agriculture in this country when you want to kill them before they actually come in?
Okay, so now over to you, Ibrahim Sorie. Now, with the loopholes mentioned earlier, with these new provisions we've seen, there's also the annual circulation permit levy, the stamp duty fee and all of it. How will these new provisions come in to close these gaps or loopholes that had existed in tax revenue collections?
Okay, thank you very much, Madam Presenter. Basically, probably before specifically answering your question, a few comments on what my co-guest here has made his contribution, basically. Of course, he has raised a whole lot of issues which I'm sure may be addressed outside the scope of this Finance Act. He knows that. And probably that might be a discussion for some other audience or some other time that we can look at the bigger issues. But to narrow it down to this Finance Act, basically, as I mentioned earlier, there's been a whole lot of exemptions. And being a tax administrator, we have seen a lot of abuse in the use of these exemptions, on these concessions in the past. And we want to see how we can put a stop or minimize those kind of things. And that is how some of these provisions find themselves in this Finance Act. Basically, maybe going back to the issue of the agricultural sector, we're talking about large-scale agricultural producers. These are big businesses, or trying to be big, basically. And they're also probably within the same rank and file of other sectors or operatives, the manufacturing concerns, the telecoms, and the rest of it, big businesses. And we want to ensure that there is a fair playing ground. Putting, for instance, GST on the equipment probably may not deter the sector in its generality. What it will do probably is to, I know it will increase the cost a little bit, that's a fact. But again, what are the other provisions in the law to cushion that effect? The law makes provision for that. Firstly, when you buy an asset, with all the charges on the cost of that asset forms the total cost of the asset. The law gives you opportunity to claim capital allowance for those assets as an expenditure. So meaning that you have the opportunity to recover each and every cost of that asset during its useful life in the business. Over time, you spread it over time. You recover it, you account for it as an expense. Allowable deductions, they're there. First year allowance, 5% of the cost of the asset. You know, Your GST you've paid, added to the cost. You spread it over, you recover that one as an expenditure. It does not affect you actually. And those rudimentary tools that the subsistence farmers use in finding their daily and tomorrow, basically, so to speak, will not be covered by this act anyways. So we've considered the low-end people and also the high-end. Bravo to him for the kind of steps he has taken to solve food insecurity, basically. We'll support him. Another thing he also has to note is that this Finance Act does not take away any agreement or concession as a separate package which government has signed up to. Mm-hmm. He knows that if he has a big project he wants to implement, he goes there for a tax waiver package. It's given to him. Even if they're going to be change of law, it never affects him. Agreements signed by Parliament, agreements that are ring-fenced, agreements that Leone has entered into with other countries, double taxation agreements, bilateral agreements, which mostly cover. I don't know whether he has benefited from that or he intends to. He can probably, being a tax administrator, can also guide him as to how he can access those ones, especially when he wants to get into those kind of bigger kind of arrangements. So in that respect, by extension, you will be protected from those kind of things. Telling us what you want to do, what kind of investments you want to make, what kind of or whatever you want to achieve. You go for a separate package. It's ring-fenced, covered. So you have the opportunity to expand on everything. So we're not killing businesses in any way. Large businesses are there. They have their packages. We don't touch them. We don't change agreements as and when the year progresses. So that's the basic thing. But if we are trying to diversify the economy, the mining sector, for instance, we've not got much as a country. We're looking at the agriculture, which has a whole lot of potential. And for his information, the agricultural sector forms almost 70% of the economic outlook of Sierra Leone. Massive area. Do you know the implication of not taxing that sector? We are losing money massively. In the name of food security, we'll secure the food when they have a package. We'll have an agreement we can pass to protect them, investment or everything. But if we have 70% of the sector not taxed, we are going to have money to create the peace.
Thank you very much,
and the basics
gentlemen.
which they did.
I think this is where we'll have to close
very interesting.
We'll
continue the discussion. And above all, probably before we close the curtain, there's also provision in the law which provides for Commissioner General's practice notes, private rulings, explanatory notes. We provide those ones.
Okay.
Personally, collectively, as the case may be.
Okay,
so the dialogue continues and everybody will find it.
Definitely.
Thank you very much for coming. We've already run out of time. So this is where we end today's edition of Wake Up Sierra Leone.